Hello everyone and welcome to today's webinar. Today we're going to be diving in and we're going to be talking about how you can repair damaged business credit. I got to tell you, I get this question a lot from a lot of people. They want to know about business credit repair. As a matter of fact, I do a lot to help a lot of companies offer business credit financing for their clients. And a lot of times when we're talking about business credit building, it's one of the common misconceptions I get is, look, are you helping people build business credit? Are you helping people fix business credit? So I thought it would be a great topic for a webinar. So today what we're going to do is we're going to lay out this process. We're going to talk about what reports, what doesn't report on your business credit report. We're going to talk about what kind of notices you get when something is going to report negative. And most importantly, we're going to dissect this process, giving you several different avenues to actually dispute and fix damaged business credit. So let's go ahead and dive in. Before we get too far in, let me first introduce myself. In case you're not familiar with who I am, my name is Ty Crandall. I'm actually Director of Business Services here at CreditSuite. And what I do is I help companies sell business credit financing to their clients. That's what I do. So if you're interested at all in offering business credit financing for your clients, I can help you. Get with me. My email and my phone number is right there on the screen. And if you're interested in building business credit, getting financing for yourself, you can get in touch with me also. I can put you in touch with a great reputable company that can help you with building business credit financing. I have a ton of experience in financing, many, many years in business credit. If you look me up online or look at my YouTube channel or any of these type of things, you'll see that I do extensive free information on business credit. So there's a lot of other information out there that you can get from me on the topic of business credit building, getting financing for your company, those type of things that you can access online. That is the only pitch you will receive from me today. If you're already familiar with my webinars, you know I talk pretty fast. I give you a tremendous amount of free information in a very short period of time, and there's no catch. There's no sales pitch at the end. What you just heard me say is about the only sales pitch you'll get if that's what you came here for today. So enough about me. Let's jump in. Let's talk about the topic at hand. First of all, I want to talk to you a little bit about what business credit is. When I do a webinar like this, I always like to just kind of get into the basics of what business credit is, because statistically 90% of the population really isn't familiar with business credit. So if you fall into that group, I want to at least give you an idea of what we're talking about here when we're talking about business credit, which is commonly also known as corporate credit. So business credit or corporate credit is credit that's basically obtained in a business name. So what happens with business credit is the business itself builds its own credit profile and score. So you're obviously familiar with credit, right? You have a credit report. If somebody pulls your social security number, they pull up your consumer credit report. Well, what a lot of people don't realize is your business also has its own credit report, but it's not linked to your social. It's linked to your EIN. So when your business has business credit, somebody can pull your EIN instead of your social and pull your actual business credit reports. So that's what business credit is. It's credit that's in the business name, and it's establishing a credit profile and score in the actual business name that's not attached to the personal credit. And then with an established credit profile and score, the business can qualify for credit. So really a business credit report or business credit itself can be used for exactly the same purpose as consumer credit is. You build your consumer credit, you use it to get credit cards and loans and mortgages and car loans. Every single one of those things you could do with business credit. You could use your business credit to qualify for credit cards and loans and car loans, even mortgages. So business credit has the same use as consumer credit once it's established, but again, the benefit, the difference is this is credit that's in your EIN, links your EIN for your business. It's not linked to you personally. So that being said, this credit is only in the business name. It's only based on the business or the business's ability to pay, not the business owner's. So since the business qualifies for credit, in a lot of cases, there's no personal credit check required from the business owner. This is one of the main reasons I think people start to build business credit. A lot of people, they have had problems with their consumer credit, and then they discover business credit and say, wow, man, I can get a $5,000 Dell card. I can get a $3,000 Home Depot card. I could never do these things with damaged consumer credit, but using my business credit, I can do those things. So that's really one of the main benefits of business credits. It's based on the business's ability to pay, not the business owners. So even if you have bad personal credit now or your clients do, they could still get tens of thousands of dollars in business credit because it's not linked to the personal credit. As a matter of fact, when business credit's built properly and correctly, the social security number is never even supplied. The social and the personal credit's never even pulled for somebody to qualify for business credit. So this business credit, once it's built, starts usually in vendor accounts, and then you move on to stores, store credit, Staples, Lowe's, Sam Club, Costco, BP, Walmart. You can get just about every major retail store you can think about, from Best Buy to Target. They all offer business credit accounts. So you can get this kind of business credit with any of these kind of stores. You can even build business credit to start getting Visa, MasterCard, Discover, American Express credit. So this is credit you could just use anywhere. You get a Visa card, you could use the Visa card anywhere where Visa is accepted. It's exactly the same thing in the business credit world. You start with these little net vendor secure accounts, not secure, but net 30 term accounts. Quickly build the store credit like you just see with a lot of these stores, and even move up to Visa, MasterCard, American Express. And then the business can also qualify for lines of loans, credit lines, loans, even commercial mortgages, even auto vehicle leasing in the business name. Business credit can be used for all of these different factors. So a credit profile can be built for a business that's completely separate from the person's personal credit profile. We just got done talking about that. That's the beauty of business credit. And if people think this is weird, they look at this like, man, it almost sounds too good to be true. But really, if you think about it, it's kind of common sense. You've never been asked for your business credit when you apply for a consumer credit card or a car loan or a mortgage, right? You never went to get a mortgage and then go, hey, I need to pull your business credit. If they said that to you, you'd go, that's really weird. Why would you need to pull my business credit? I'm applying for a personal home loan. It makes no sense. Well, it's exactly the same case in the business world. If your business credit's built and you're applying for money or credit or anything in your business name, why would they pull your consumer credit? It makes no sense. If your business credit's established, they don't even need to pull your consumer credit. That's exactly what business credit can do. Okay, once you build the separate credit profile, the business stands on its own and can get credit on its own without this personal credit check. Now, the other benefit there is it gives business owners double the borrowing ability. Because let's say you have a Staples credit card. Well, great. Now you can get a Staples credit card for your business. Let's say you have an Apple credit card. Well, now you can get an Apple credit card for your business, and so on and so on. So not only can you have credit on your personal side with all of these stores and Visa, MasterCard, Discover, you can also do exactly the same thing on the business side. So it easily gives you the potential to double your overall borrowing ability. Now, business credit scores are based only on whether the business pays its bills on time. So this is one of the really major benefits of what business credit can do, because what happens is with consumer credit, the score is complicated. It's based on credit mix and length of credit history and inquiries, and 5 different factors affect the consumer credit score. It's hard to control. The business credit score literally is based on one factor. How do you pay your bills? If you pay your bills on time, you have what's called an 80 score. You've probably heard somebody say, I have an 80 paydex. All that literally means is you pay your bills on time. If you pay early, you have a 90 or 100 score. If you pay late, you have a 70 or 60 or 50 score, depending on how late you are. So because it's so easy to get a good score, it's another benefit of business credit. It's much faster to build and obtain business credit because let me give you an example. On the personal credit side, it takes you 6 months when you start a profile to even get a score. In the business world, you could get a score in 60 days, and you could get $5,000, $10,000 limit Visa cards in 6 months. So it can happen much, much, much faster in the consumer world than it ever, or in the business world than it ever could in the consumer world, which is one of the major benefits on why people love business credit so much. Another major benefit of business credit is that approval limits are much, much higher on business credit accounts than personal accounts. Actually, SBA themselves says that they're about 10 to 100 times higher on the business side than on the consumer side. So I said earlier you could double your borrowing ability, and that's not actually accurate. You could actually do way more than double it, because if you have a $2,000 Staples credit card, chances are very good that your Staples business card would be for $3,000, $4,000, $5,000. The approval limits are significantly higher than consumer credit. So not only can you get credit for your business linked to your EIN, but your approval limits on those accounts are significantly way higher than you would find on the consumer side. Now, when done correctly, business credit can be done without a personal credit check. We talked about that. And it can be attained regardless of personal credit quality. Here's the trick with this. When you've built business credit, you just leave your social blank on the application. I talk to a lot of clients and say, well, hey, Ty, I built my business credit, and then I go, and they're still asking for my social. They're always going to. Why? Because you'll give it to them. If you give them your social security number, you're going to be liable for that debt. So, hey, they're going to take a shot and put the blank on the application hoping you'll fill it out. But in reality, if you left the social security number blank on a business application and your credit was established, your business credit was established linked to your EIN, they would pull your business credit based on your EIN, and if your company's strong enough to qualify, they would give you the credit without the social even need to be on the application. So that's the beauty. You can start filling out these applications, leaving your social blank once you've actually built and established your actual business credit. Okay, and most business credit can be obtained without the owner taking on a personal guarantee or personal liability. Another big benefit of business credit, okay, because what happens is this is the same pattern. This is why businesses fail. If you want to know why 90% of businesses fail, here's why. People have an idea. It's a good idea. They start a business. Well, you got to get incorporated. You got to get a bank. You got to do all these things that have an expense. So you start using your personal credit cards or your own personal money to typically pay that expense. And then you start growing the business, doing the same thing until eventually your money's gone or your friends and family money that you started with isn't there. Your credit cards are maxed out. Then people try to go get money, but the credit cards are maxed out, so their scores are low and they can't get money. This is the same cycle that so many failed businesses follow. The benefit of business credit is that you can get credit in the business name that's not linked to you personally. So as you're starting your business, you can get Dell and Apple credit and credit at places like Staples and Office Depot, places that could give you stuff you need to grow your business. But this credit you're getting, it's in the business name. So that means you're not personally liable in case of default. So heaven forbid, if you ever did default on that and didn't pay the bill, and your business maybe went under or had problems, which of course no business owner expects, but 90% of the time it happens, then they couldn't come after you personally for that debt. It's a big deal. You're not personally liable for your business debts. If you're using any other kind of credit, you are going to be personally liable, which means they're going to come after your business first, then they're going to come after all of your personal assets. With business credit, they can't come after you personally. They can only come after the business in case of default. So let's talk a little bit more about the business credit reporting agencies. This is where it has to start. When we talk about how to fix business credit, the first thing we have to talk about is the three business credit reporting agencies, the three main business credit reporting agencies that you may have derogatory credit with. So there's three major business credit reporting agencies that collect and publish business information. There's our Dun & Bradstreet, Equifax, and Experian. Now, obviously, you're probably familiar with Equifax and Experian because they're big players in the consumer world too. TransUnion really isn't a big player in the consumer world, but in the business credit world, Dun & Bradstreet is the major player by far. They are by far the largest, but the other two are catching up quickly. The truth is they'll never catch up. You know, Dun & Bradstreet, last time I checked, has 213 million business records on file. Experian has 20 million. I mean, it's like not even close. Dun & Bradstreet has 10 times more volume of data than Experian does, and Equifax is really, really far off. They're a very distant player in this space. So even though Experian and Equifax are growing, they're never going to grow fast enough to ever reach D&B. D&B, Dun & Bradstreet, is the massive major player in this business credit space. So let's tell you a little bit about each bureau. Then we're going to talk about specifically how to start fixing credit with each bureau. So Dun & Bradstreet, the biggest major reporting agency. Okay, they're a publicly traded company. They're out of Short Hills, New Jersey, and they actually trade on the New York Stock Exchange. So I'm not going to get into a big bunch of history about them. That's all I'm going to tell you about D&B. And I do want to tell you a little bit about their credit score too, because these negative items you're trying to remove will affect the actual score. So I want you to know exactly the kind of impact they might have. So with Dun & Bradstreet, their main credit score is known as the PAYDEX score. Now, I say the main score because business credit scoring is a little bit different than consumer. If you pull a consumer credit report, you have a credit score, right? Well, on the business credit report, if you pull a business credit report, you might have 8 scores. Dun & Bradstreet has 8 different scores on the report that dictate different things. But the main business credit score used in the business world is the PAYDEX score. Not only is it Dun & Bradstreet's main score, but overall, it's the main score used in the entire business credit reporting agency. The PAYDEX score ranges from 0 to 100, with 100 being the best score you can get. Earlier, I used the example that if somebody has an 80 PAYDEX score, that means they pay their bills as agreed. That means they have good credit. It's like a 720 equivalent consumer credit score. So paydex ranges from 0 to 100. How you pay your bills literally determines your actual score. So Experian was formerly a division of TRW. They're actually an automotive electronics giant back in the day. TRW was actually founded back in 1901 as a capped screw company, and Experian's most recent score system is known as IntelliScore Plus. So you're going to hear a lot about IntelliScore. IntelliScore is Experian's credit score, and they kind of boast that as the next level of credit scoring. This IntelliScore Plus just rolled out, I think, less than 10 years ago, I think like 8 years ago, and they really highly advertise this. This is the most effective, up-to-date credit scoring model in the business world. Whether it's not or not, or is or not, I don't have an opinion. I can just tell you that IntelliScore Plus is the most recent of the scoring models, although IntelliScore has been around for a while. Okay, so let's talk a little bit about Equifax. Equifax is called the Small Business Financial Exchange. It is the most important for cash lenders such as banks, and Equifax's main business credit scoring model is known as the actual credit risk score. Okay, so that's their actual main model is the credit risk score. And credit scores range from 1 to 100 with them, lower score indicating a higher risk of serious delinquency. Exactly the same thing. Okay, so that gives you an overview of the credit reporting agencies. And some of that stuff I think is basic to what we're talking about here, because you have to know what business credit is. You have to know how it works. You need to know the reporting agencies, because we're getting ready to get into how you can fix your business credit. So you're going to have to know where your damaged business credit is and how to fix it. And now that you know a little bit more about the reporting agencies and the scores they have and how stuff affects the scores, you can have a better idea what those negative accounts might be doing to your actual credit if they're on there. So now let's jump into the heart of this webinar. Let's talk about how to fix it. Let's talk about how to fix damaged business credit. Let's talk about how to do business credit repair. Well, the first thing I want to tell you is many business owners think they have a lot of items on their credit report that are negative, and they are. I hear this all the time. I mean, probably less than 5 or 10% of the time when I talk to a business owner that thinks they have business damage on their credit report, do they ever really have it? Most people think they have negative items on their credit report, and they think they need business credit repair, but what they come to find out is they don't need it at all. Most of those negative accounts that they think might be on the report aren't on the report, and here's why. Over 90% of trade vendors don't report to the business credit reporting agencies. So of all the people that you have trade or vendor credit with, the reality is most of them don't even report to the business credit reporting agencies. So even though you might think you've defaulted, that you went late, that you have a negative item because maybe you didn't pay one of your vendors that you were supposed to have paid them, that doesn't automatically mean you have bad business credit. In reality, most of those vendors you deal with don't even report to the business credit reporting agencies anyways, so even though you went late with them, chances are still pretty good that it had no impact on your business credit at all, because the creditor, statistically speaking, probably didn't even report the data to begin with to the business credit reporting agencies. So again, chances are good that negative information you think might be on your report might not even be on your report at all. So if you were going to have something reported on the credit report, one of the things that you're going to want to know is that many of the time you'll get alerts about this before the negative item even reports on the credit report. Think about it. You don't have anything like that in the consumer world, right? If you're going to go late, the creditor and the credit bureaus don't notify you that you're about to go late. But keep in mind, most don't report to the credit reporting agencies. So when they do, they actually, in a lot of cases, will send you actual alerts. I mean, the creditor themselves will almost always notify you in writing before they report the data to the business credit reporting agencies. And I had this happen one time in my business credit career. I had paid for a magazine ad, and things went haywire quick. I absolutely did not get what I paid for, and there was a dispute between me and the company about what was owed. I didn't want to pay it. I didn't think they delivered the service. And then I started getting a notice from them. I got a notice. I got a phone call. I got 2 letter notices from them stating, look, we are going to report you late. Here's the person we're going to report it late to, Experian. So it was very interesting. And a lot of these creditors do the exact same thing. It's not common for them to report. So in a last-ditch effort to try to get you to pay, they will actually send you notification, and sometimes multiple times, just to tell you, you got this negative, you need to pay it or we're about to report to the business credit reporting agencies. Okay, so that's one of the big differences you're going to see on the consumer and business side. First of all, most of these items don't even report. Most negative stuff you think will be there isn't even going to be there to begin with. And one of the telltale signs that it's going to be there is that they've sent you not one, but multiple notices, sometimes by mail and phone, alerting you that you're about to have a negative item added to your actual credit report. Now, in many cases, the reporting agencies themselves, like Experian, will notify you before they report. In that example, not only did I get notices from the creditor, but I got 2 letters, maybe 3, from Experian themselves. I tried to find those letters to include this webinar. I tried to find some online, too, couldn't find them. So sometimes they'll send you as many as 2 or 3 notices clearly telling you that someone's about to report something negative on your report. They even advise you to call the creditor and resolve the dispute. It's crazy. Okay, I spent a lot of time in the consumer repair world. I've never seen anything like this before. In this business world, you get notices by mail, you get notices by phone from the creditor that they're going to report you late in some cases. You get notices, sometimes 2 or 3 notices from Experian or D&B themselves telling you, hey, please resolve this. We don't want to report this on the report if it can be resolved. So in a lot of cases, you have a lot of chances with these notices to resolve any kind of dispute before it's reported. And there's a couple things I'll kind of expand on that. But first of all is don't expect these notices to come all the time. Don't not pay your bill and say, well, I'll get a notice if they're going to report me. There are some companies that just consistently report to the business credit reporting agencies, and if the company you deal with is one of those companies, then they're always going to report. Okay, and you can always ask a company, do you report to the business credit reporting agencies? Yes or no, and that'll tell you if that history is going on there, whether it's good or bad. But then the larger percentage of companies only report negative stuff in some cases and only when they want to. In those cases is where you'll usually see these notifications come in. So let me give you an example, right? Bank of America. They report to the business credit reporting agencies. So if you go late with Bank of America, you're probably not going to get any kind of notice. It's probably just going to be on your report along with all of your other on-time payments because that account possibly was reported to them the whole time you were paying on it. But let's say there's Joe Schmo's Computers, and you have an account with Joe Schmo's Computers, you don't pay Joe Schmo, and all of a sudden Joe Schmo's trying to collect, and Joe Schmo finally says, I'm done. I'm going to send this item to Experian and put it on your business credit report. Well, since Joe Schmo doesn't just report all of his accounts on a regular basis, and he's just sending a notice to them that he wants to add somebody as a collection, that will typically prompt Joe Schmo to reach out by phone and letters telling you what he's about to do because he's going to incur an expense when he takes the step. So before he incurs that expense, he's probably going to take one last-ditch effort to get you to pay, and then before Experian puts it on the report, they might send you 2 or 3 notices. So that's when you'll usually receive those kind of notices. So how do you know if something's negative on your business credit reports or not? Well, that's the very first step with fixing business credit. The very first thing you have to do is you have to pull your business credit reports because you need to know what's on there. You don't even know if there's something negative on there or not. 90% of these people don't even report. So chances are good nobody's ever reported anything negative. Well, the only way you're actually going to know that is to actually obtain your business credit reports. So business credit reports are offered by all 3, Experian, Dunn, Bradstreet, and Equifax, and you're first going to want to get a copy of the business credit reports just to see what's being reported. Hey, look, even if you don't think there's negative items on your credit report, it's still a pretty good idea to pull your business credit. If you have any belief at all that there's good or negative on there, you should at least pull this because I'm going to tell you a secret. Everybody else is, okay? Nowadays, anybody can get your business credit report. It's not like a consumer credit report where you have to give informed consent and all these things for people to pull your credit. Anybody can pull your business credit. I was just on the other day with a credit monitoring provider that gave me sample access to their system. When I logged in their system, I could type in any company I wanted to search, and I could pull up the business credit trade lines for that company. It's crazy. It blew me away. I could pull up any company I wanted to pull up, and I could see the trade lines, how late they were, what their credit scores were, all those type of things. People can easily access your information. So you need to know what's on your business credit report because the secret is all banks pull your credit. Now, in the consumer world, we're used to the Fair Credit Reporting Act, where you have to get this notice in the mail that says, hey, we turned you down and we pulled your Experian credit report. You might want to look at Experian because our decision was based on this data. Nope, not in the business world. They will never tell you that they're even pulling your business credit. They will never tell you if they turn you down based on your business credit. So the only way you're ever going to know is to pull your business credit, manage it, know what's going on. Because although most people don't realize this, if you walk into a bank and apply for a business credit card or a business loan or anything associated with your business, they pull your business credit. I've talked to people that work at the banks that don't even know this, but when you get into their trainers and their underwriters and trainers will tell you absolutely no questions asked. One of the first things they do is pull your business credit reports. So if you don't think you have negative item or do, it doesn't matter. At least you should at least look at your reports to have an idea what's going on, what's being reported. So with DMB, you can enroll for DMB's self-monitoring program, which is kind of like their credit monitoring program. Now you can go to this link, mycredit.dmb.com. You could, actually just go to this link whenever you want to or write this down, but you don't need to. If you go to Google and type in business credit monitoring Dun & Bradstreet, you'll immediately pull up D&B and be able to enroll for their credit monitoring. Or you can go to mycredit.dnb.com/monitor/business/credit, and that'll take you there too, as you can see on the screen. Okay, so the first thing you want to do if you do want to get a D&B report is to go and get their actual credit monitoring. And how much is it? Depends on what kind of data you want on that report. It's about $39 to $99 a month, depending on the kind of data that you actually want on that report. Experian.com/small-business will take you to where you can get business credit reports with Experian. And again, you don't have to write down this really ridiculously long link that I pulled up. I just went in and typed in Experian Credit Monitoring Business, and you'll immediately pull up a page that could take you to a point where you can actually get a report. They've got weird prices. It ranges from like $36 to $175 for your actual business credit report with Experian. And then you've got Equifax. You could purchase a copy of your Equifax small business report here, equifax.com/small-business. Okay, you can go there /credit.report. It's kind of a weird link. Again, I just copied this from online. You can easily go online, type in Equifax business credit reports or credit monitoring, and you'll be able to pull it up. And from what I saw, they charge about $99 for a full report. So it kind of gives you an option here. You can enroll for regular monitoring. You can enroll for an actual report, whatever works more convenient for you. But again, if your first concern is that you have negative items, well, hopefully a way to save yourself some money is to find out who that company reports to. So if you think you have a negative item with Joe Schmo, then try to find out who Joe Schmo reports to, and then just pull that report, whether it's Experian, Equifax, and DMB. Helps save you the cost from pulling all of your reports. But if you've never seen your reports and you think you might have some stuff on there, it's really not a bad idea to get all three business credit reports so you know what's on all three of your actual business credit reports. So let's talk about the Fair Credit Reporting Act. Now, if you're familiar with the Fair Credit Reporting Act, then you already know what it does. If not, I'll tell you what it does. It outlines consumer rights to dispute inaccurate information on the credit reports. Well, that's not really what the FCRA does. For the purpose of this webinar, we'll say that it is. But what the FCRA does is it regulates credit reporting. Really, it tells the credit bureaus what they can report, what they can't report. It oversees the practices they must comply with. It puts in forth regulations of giving people the ability to dispute inaccurate information. It regulates how the credit bureaus have to process those disputes. The Fair Credit Reporting Act, the FCRA, is what makes consumer credit repair possible. Consumer credit repair is based on the FCRA. The only reason the whole profession of consumer credit repair exists is because of the FCRA, because the FCRA tells the bureaus you must dispute this inaccurate information and make changes if you can't validate it, so on and so on and so on. So this act outlines the consumer's rights to dispute inaccurate information on the credit reports. But the important thing to note is this law does not apply to business credit at all. It has nothing to do with business credit. So anything you think about of your rights under the FCRA, throw them out the window. None of it is applicable in the business credit world. The FCRA has nothing to do with business credit whatsoever. As a matter of fact, there's no current laws which outline business owner rights regarding credit disputing in the business world. There's none. So that's the first thing you need to know. Unlike in the consumer world where you have consumer credit repair, right? You can go online and type in consumer credit repair and pull up whatever, 1,000 companies, Lexington Law and a bunch of other legitimate companies that offer business consumer credit repair services. But you're not going to find things like that in the business credit world. You may never find a company that's all they do is actually fix business credit. I'm sure they're out there. I haven't personally found any companies that's all they do is fix business credit. And here's why. There's no formal process for it. Consumer credit repair exists because the Fair Credit Reporting Act requires the credit bureaus take certain steps and take certain actions. There's no such regulation in the business space. So the business credit reporting agencies aren't required by law to answer your disputes in any particular way like it's regulated in the consumer world. If there's anything that you're going to learn today that's probably the most important, it's this right here, that the Fair Credit Reporting Act does not apply to fixing your business credit, that there's no formal process or law that regulates how you actually fix business credit. So the FCRA also requires that credit issuers notify you of what bureaus they pulled to determine your denial for financing. Again, this makes it easy, right? You go apply for Bank of America loan, they turn you down, they get you that nice pretty letter that says they turned you down because they looked at Experian, your Experian report's not good. Well, that's easy. Now you can go pull your Experian report and see what's on there that's causing you a problem. Makes it simple. Makes it easy. But in the business credit world, it's not the case. Again, you'll rarely ever even know that they pulled your business credit because they don't have to tell you. They don't have to send you that letter telling you who they reported it with, and they won't tell you who they reported it with. Remember, the frontline people at the banks, they don't even know about it. Okay, our senior business advisor that helps our clients build business credit worked for a bank. She was the biggest business loan salesperson in the country for Wells Fargo. She had no idea that they pulled business credit reports until she became a supervisor and worked with underwriting and discovered it. So if those type of people, the biggest people in the country dealing with business financing, don't even know that business credit's pulled or know who's pulling it, you are not going to know either. So this is a big difference. The FCRA tells you, hey, they pulled your credit. Who's they pulled? Here's who they pulled it through. You don't have those notices in the business world. Now, this is important because, first of all, you're going to have a lot of people who pull your credit that you didn't even know about. Okay, they're never going to tell you, and you're never going to be told what bureau they pulled, so it makes it a little bit harder to figure out who they're actually pulling to actually turn down your credit. So let's talk about disputing. How do you dispute negative items? Well, there's 3 main methods during this webinar we're going to talk about that you can actually successfully dispute business credit. And the first of these is something that used to be one of my favorite tools of the trade in credit repair. It's called a debt validation letter. So if you see accounts or details you don't recognize or feel are inaccurate on your credit report, on your business credit report, you can request a debt validation for that account. So a debt validation is where you solicit the creditor for verification of the account details that they're reporting. Okay, very effective in consumer credit because if there's something on there, you can go, hey, validate this debt. Why don't you provide to me evidence of everything you're reporting? And the way the FCRA is written, they pretty much have to supply you of that evidence or validate what they're reporting, validate the debt. Remember, there's no FCRA. There's no formal requirement or structure that requires that they respond to a debt validation letter. So it might work, it might not work. It's not regulated like it is in the consumer world. But it's a best first attempt to find out what's going on. If you've pulled your reports, you've confirmed there's a negative account on there, then the next thing you want to do is send a debt validation letter to whoever's got that negative report on there and say, hey, what is this? What's going on? Provide me information and details on this account, my terms, when I went late, how much I owe you. This, I don't think this is inaccurate. I don't think this is right. I don't even know what this is. Whatever the case is. Now, don't go in and play dumb, okay? If you know what the account is, then don't go, I don't know what this account is. Okay, be legitimate 100%. Don't go lie to them. They have the evidence that you applied or whatever for the account if it's real. But if you feel it's inaccurate, even if you don't feel it's inaccurate, you just want them to validate it, you could still send them a debt validation letter and say, hey, look, just validate this debt. Just show me some more information about what this debt is, details of what's owed, these type of things. Now, in a lot of cases, they might delete it just because they get this debt validation. Maybe the account is inaccurate. Maybe they don't even have the account on the records, for example. Now, typically going to send you back details of your account that they're reporting when you send this letter. So you're going to send the details of the account, and they're typically going to send you the details back. Now, I already told you they're not required to by law, right? The Fair Credit Reporting Act doesn't require them to do this, so why would they do it? Well, because you're soliciting them on the debt. So, of course, they're usually going to send you a debt validation letter. You just made a step to show that you're kind of maybe willing to pay the debt. Okay, think about it. You know, if you're a salesperson, you always look at people to take a certain step to show you they're interested. Maybe that step is they opt in on your website. They go to your website, they opt in. Well, if you have a credit repair website and they opt in on your website, chances are pretty good that person's a good candidate for credit repair, right? Because why else would they go to a credit repair website and opt in? Same thing here. From the creditor's perspective, they go, here's a letter from somebody asking for more clarification on this account. So now this account must be on their radar, and this is a hot prospect who might possibly pay this debt. So we're going to send them what they're looking for and start the conversation and start working with them to possibly get this debt paid off. So even though, again, they're not required by law to comply with the debt validation letter, in a lot of cases they will because they see that as your first step to trying to rectify the actual debt. So the FCRA and FDCPA apply to consumer debts, not business debts. I'm bringing in the FDCPA, the Fair Debt Collection Practices Act, another very important law that regulates on the consumer side what debt collectors can and can't do. It's not applicable in the business world. It has nothing to do with business to business. So you've got to know you're not protected in this process under the FCRA or the FDCPA. But you can send out that debt validation letter still. But again, just as I've already said, the creditor is not required by law to respond to disputes. You have to know that. You can send it, but it doesn't mean by law that they have to respond. Okay, so your request must be sent to the creditor in writing. That's how a debt validation letter is done. Okay, and I don't have a sample debt validation letter as now that I'm thinking about it. It might not. Maybe I do have one. It's not actually. Maybe I do. So let me see. And you want to dispute the debt with the credit reporting agencies also. Okay, so not a bad idea to write the letter to both. Write it to the actual creditor and write it to the bureau. Write it to Dun & Bradstreet. Dun & Bradstreet, I see this account provided on my credit, but it doesn't make sense. I think it's inaccurate. I don't know what it is. Would you mind providing me any details you have on this account? Maybe you'll get some results. Maybe you won't. But if you don't, and no response is received within 30 days of mailing the letter, then you should dispute the account with the business credit reporting agency. So let me outline that process again. First, send the debt validation letter to the creditor themselves. Don't even bother the bureau at this point. See what they say. If they don't respond at all, or if they do respond, then you may never need to go to the bureau. You might get it resolved right there. If they don't respond, then in 30 days, send your next debt validation letter to the actual bureaus themselves, asking for clarification on their side. Okay? If it were me, I would send the debt validation letter again, maybe certified the second time. So I would send the debt validation letter the first time to the creditor. You don't get a response in 30 days, send another debt validation letter to the creditor, maybe certified mail, and send it to the business credit reporting agencies. So if that doesn't work, now you need to start disputing with the credit reporting agencies to begin with. So let's outline the steps of where we are so far. You went in, you think something's negative, you try to check with the creditor to see if they do report, you couldn't get that info, you pulled the business credit reports, you see the creditor is on there, you send a debt validation letter to the creditor asking for clarification. Creditor doesn't get back to you. A month passes, you send another debt validation letter to the creditor, and you send it to the actual business credit reporting agencies. Another month passes, and you don't get anything. Now you start the process of disputing with the business credit reporting agencies. And to do this, you're going to contact customer service with any of the 3 reporting agencies for billing disputes, changing payments, and outdated public filings that appear on your report. Okay, so when you dispute an item, the business credit reporting agencies will then have vendors re-verify payments and remove charges if the vendor cannot verify the information. So in this part, it works kind of the same as a consumer credit disputing does. You dispute the debt. The reporting agency goes through to the creditor and says, this person's disputing this debt. verify this information is accurate or not accurate. Now, upon that, what might happen is they might just correct the information, not hear from the creditor and correct it, or the creditor is not able to validate what's being reported and they correct it. But I can tell you this, it's fairly easy to fix business credit from what I've seen. In almost every case I've seen, 50% of the time, initial attempts to correct it, fix it. Whether you're doing any of these three methods I'm telling you, the initial attempt to fix it usually fixes it. Remember, this isn't like the consumer reporting agency. The consumer world with credit scoring or credit repair is now a system. It's a process. They have computers like OSCAR and eOscar and OCR. They make money on the actual disputing. They outsource their disputes to other countries. They have these radically big dispute processes because so many people dispute negative information. In the business credit reporting area world, you don't have a lot of disputes. So because of that, it's not all systemized. And I guess that probably has something to do with tying into the success. But again, what I see is about 50% of initial attempts to fix negative items are usually successful on the first attempt. So what happens here is you call them up and say, hey, what's up, D&B? What's going on? I got this item on my credit report. It shouldn't be there. Don't even know what this thing is. Okay, maybe you've sent the debt validation. Maybe you haven't. If you have, you tell them that you have. And say, I want to process a dispute. How can I go about disputing this information? And right there on the phone, they can actually initiate a dispute for you. Now, after I'm thinking about this, I probably should have put their phone numbers on here. But again, you can go online, easily get their phone number. You can also, if you're with credit monitoring, right on your credit monitoring, they're going to give you probably a back line number to their back office so you can actually get it done. So again, you're going to be able to come in, dispute it with a business credit reporting agency by phone if you don't get much success with the actual debt validation. So the business credit reporting agencies can also help to clean up issues that have been settled or dismissed, but yet still appear on the credit report. Remember, they're going to go back to the creditor and go, hey, verify this, is this information accurate? Well, again, in the business world, they don't seem to really care, especially if they've been paid. So if you see stuff that's settled or dismissed or you don't think it's on the report, it's absolutely something you should dispute because in most cases that item can get removed with a simple dispute. And you may be asked to send in documentation to verify a settlement or dismissal for this process to work. So you might call them up and go, look, I don't know what this is. This shouldn't even be on my credit. This account was settled. Okay, and then they say, well, send us proof of the settlement. You send them proof of the settlement, and then they take the account off your credit report. See, let me explain. It's a whole different webinar. But what happens is there's a lot of money that's made by the consumer credit reporting agencies because of disputing. You might not know this, but what happens is they made an entire business out of this. If you send a dispute in for Bank of America has to pay the credit bureaus to process that dispute. Okay, but what happens is they might charge Bank of America $1 for the dispute, but in reality, their actual cost to do that dispute, because they outsource it, only cost them 47 cents. So the business credit reporting agencies have made a business out of credit disputing. This is why they have no interest in voluntarily helping you fix the negative items, because they've made a business out of fixing the negative items. Business world is nothing like this. They're very easy to work with in the business space because they don't do a lot of disputes. It's not a business. It's not their revenue stream. So you can easily work with them more easily, or you can more easily work with them. And if you tell them you have a settlement or something like that, then they might ask you to send that proof in to get that resolved. And the business credit reporting agency, again, will recheck the status of the public filing if they don't have any documentation, or will check with the creditor to verify that information. Now, third way you can dispute business credit is online. Each bureau has an online system you can use to actually dispute business credit. Now, Dun & Bradstreet Dun & Bradstreet has a system called iUpdate, which can help you too. What it does is it basically gives you an easy way of actually updating your information and tracking it. So you can go to this iUpdate. You go to Google, type in iUpdate. It's pretty cool. It doesn't cost you anything. And you can get in there and you can pull up your information, and you can even submit to change information that's inaccurate right on iUpdate. It just makes it really, really easy for you to do. Registered users, you got to register. You can view, print, and submit updates to your business information report. Okay, and they love this. because you got to keep in mind the credit reporting agency's job is to collect data. That's what they do. They collect data. Well, with iUpdate, they're giving you an easy way to give them the data they want. I mean, so it works for them. You got a good way to go get your information updated if needed, and they've got a good way to voluntarily get you to give them the information that inevitably they're looking for anyways. Now, D&B Credibility, I got to tell you about them at this point. D&B Credibility provides credit monitoring services through D&B. Okay, so when you get credit monitoring with D&B, if that is something you do, you're probably going to be contacted by D&B Credibility. What you need to know is this: don't get upsold by them. Okay, first of all, Dun & Bradstreet Credibility is not Dun & Bradstreet. They're a private company out of California that started in 2010. 4 years ago. They are not a publicly traded company in Short Hills, New Jersey that is the biggest business credit reporting agency. They're two completely different companies. So don't get upsold by D&B Credibility. You do not need their business credit building package. It won't help you. So you have to know this, because if you get credit monitoring with D&B, they're going to call you and they're going to sell you a bunch of, excuse my language, but crap that you don't need. They're going to try to get you to pay for a DUNS number and pay for this, and they're going to tell you about adding trade references to your credit report. It's crap you don't need. You could do it all basically at no cost. Don't do it. So keep in mind, you get with credit monitoring with D&B, they are going to try to upsell you, just so you know that. So back to Experian, Experian.com/small-business business credit information JSP. Let me see if I can... Okay, so I'm going to leave this up for a minute, or actually, I love it. I already thought of this. Or Google Experian Update Business Credit to get to the same link. Isn't that nice? I give you the link, and even though the link's confusing, I tell you exactly what to Google to get to the same thing. This is Experian's update system. So if you want to update data with Experian, you simply Google Experian Update Business Credit or go to this link provided right here. And you can go to their online system for updating your information, checking your information, and updating it. Okay, if you didn't have time to write this down, don't worry, because you attended this webinar. I will send you a playback of the webinar. Equifax. Equifax does provide dispute services through their online credit monitoring platform in their member center under disputes. So again, I've told you, Equifax is not a big player in this space. Experian, D&B, they have online systems you can go to without buying their credit monitoring to update data. Equifax doesn't. Equifax makes you buy their credit monitoring, and then when you buy their credit monitoring, you can go into their member center under disputes and file a dispute. In actuality, all of the business credit reporting agencies allow the same thing. So with Dun & Bradstreet, yes, you have access to iUpdate where you don't have to pay for their credit monitoring. If you did pay for their credit monitoring, they give you yet another way that you could dispute that information. Okay, so all three business credit reporting agencies, if you get credit monitoring, you can dispute the items right through that credit monitoring. Okay, which is why the first step you should take is to get a copy of the credit reports to see what's on there. Then you could even dispute online. And in my experience, that's one of the most effective ways to dispute. You might even do it before a debt validation letter. Just dispute the item online and see what happens. It's easy, it's fast, and it usually works very successfully. Okay, but Equifax, you have to have their credit monitoring to do that. They do not have another system outside of their credit monitoring where you could do that. Now let me give you a tip. Keep in mind, the business credit reporting agency may not be allowed to release the name of the person making the reference on the credit report. Remember, you don't have the same rights as the FCRA. So it is absolutely crazy, but you could call the business credit reporting agencies and they could maybe not even tell you the name of the person that's reporting negative information. Remember, don't get all chest stuck out with the business credit reporting agencies. You don't have the same rights you have with consumer reporting. They don't have to give you this data. So just keep in mind, if you're not sure who a creditor is, those type of things, the business credit reporting agencies, you can call them, but it doesn't mean they're actually going to give you that information. However, again, if you do contact customer service to discuss an item on your report, they will talk to you about your options and give you as much information as they can actually give you. Settling the debt. If your debt validation and investigation don't net you the deletion, next you need to contact the creditor. Find out from them what you must do to have the item removed from the business credit report. Now, usually they'll remove the account if you pay the outstanding debt. Again, way different than in the consumer world. The consumer world, creditors are scared that if they accept a paper deletion, which is what it's called, that everybody will follow suit, so they usually don't do it. In the business credit world, it's usually pretty simple. They just want to get paid. If you go to them and say, hey, man, I want to pay this debt. I just want it off my business credit report. Can you do that? In a lot of cases, they will actually do that for you. Now, remember, okay, if they do that, you need to make sure that you get that in writing. And again, the main reason for derogatory item being on the report is usually because the creditor feels there's an outstanding balance owed. So again, they're typically going to remove the account if you pay the outstanding debt. That's their priority. They're not trying to ruin your credit. They don't care. All they want to do is just get paid. So if you're willing to pay them, then it gives you the best chance of getting it off. And again, if you reach the agreement for deletion, get the agreement in writing and ensure that they provide you a time frame of when they will correct the damage on your credit report. So ask them, hey, okay, you said you're going to fix it. If I pay this debt, give that to me in writing and tell me when are you going to fix it? 30 days, a week, 2 weeks, and make sure you get that in writing from them. And if all else fails, build your business credit. Meaning that if you tried debt validation, you tried disputing online, you tried disputing through the credit monitoring services online, you tried calling customer service, you tried working it out with a creditor, you couldn't get it worked out, you didn't have the money to settle it, you've done everything you can do. Well, what else do? Well, you build your business credit. Because remember, business credit scoring is based only on how you pay your bills. This is why I went over business credit scoring with you earlier. So if you pay the majority of reported accounts on time or early, you'll have a good credit score, right? So with this being the case, then most business owners have little or no credit reporting whatsoever. So what happens is one negative item reporting on the business credit report can have a serious impact on the score. Remember, 90% of trade vendors don't report. So most of the credit your business has doesn't even report to the business credit reporting agencies. So if you have one negative item on there, massive impact on your score because you have so little positive credit there to offset that negative that's on there. So the essential thing to do is you've got to make sure you're continuously building your business credit profile. You're doing it with your consumer credit, right? You never just get to a point in your life where you just stop building your credit. You're always applying for credit, getting credit, using credit. You need to do the same thing in the business world because one of the best ways to battle against negative information on your report is to offset it with lots of positive information. Remember, the business credit score depicts how you pay your bills. So if you pay 12 bills on time, then you have an 80 score. If you have one account negative, well, maybe your score is now going to be 70 or 75. It's not going to be impacted that much because you have 12 positive accounts. If you have one positive account in your credit report that you paid as agreed and one you paid late, well, now your score could drop to 40, 50, way low because you have no positive credit to offset the negative. So the best way to do this is to keep adding positive and positive and positive items to your credit. Keep paying those bills as agreed to offset any negative accounts that might actually report. And one of the best ways to battle negative information on the report, again, is to offset it with lots and lots of positive information. So make sure you continuously build your business credit profile just as you would with your consumer credit report. So that's it. Hopefully you got a lot of good information out of today's webinar. We dove in, we talked a little bit about business credit, the benefits of business credit. We talked about the business credit reporting agencies, how the actual credit scores work themselves. So you have a pretty good idea of that. And we discussed the 3 most effective ways to fix business credit through an online system, through debt validation, and also by calling customer service at the business credit reporting agencies and working with them. If those things fail, we even talked about some other things you could do regarding settling the debt and actually doing what's called a paper deletion to have them delete the negative item in actual return for receiving your payment. And if you do that, we talked about the importance of getting all that in writing. And again, if all else fails, well, then keep building and adding positive credit to offset that negative, and that one negative account you have will have minimal impact on your overall score. So I'm going to go ahead and wrap this up. I literally have another webinar I'm getting ready to jump into right now, so I don't have time for questions. But if you do have more questions, feel free to give me a ring, 877-600-2487, or you can send an email to ty@creditsuite.com, Ty spelled T-Y. And our main website's creditsuite.com. So if you want any information on offering business credit financing for clients, those type of things, feel free to check out our website. And, you know, if you need anything, have any questions for business credit, getting financing, fixing business credit, those type of things we can help with, feel free to give us a call or send us an email. Thank you, everybody, so much for taking the time to attend this webinar. Hope you got a lot of great information out of today. Thanks, everybody.